You weren't supposed to hear this, but the data is screaming something most people will miss until it's too late. Right now, Bitcoin is flashing a signal that's actually stronger than 2017. And if you understand what that really means, then you understand something the system doesn't want average people thinking about, because this isn't just about price. This is about power. This is about control. This is about the biggest wealth transfer happening quietly right in front of your eyes while the crowd is distracted. If you want real financial truths they don't teach, hit subscribe and turn on notifications. You don't want to miss what's coming. Because what we're about to unpack is not normal investing talk. This is the kind of information that changes how you see money forever. Most people think Bitcoin is just a chart, just numbers moving up and down. But Bitcoin has never been about that. Bitcoin is a mirror. It reflects the hidden mechanics of the financial world, the parts they never explain on television, the machinery behind currencies, behind markets, behind the illusion of stability. And right now, that machinery is shifting again. In 2017, Bitcoin was a wildfire. Retail investors poured in like moths to a flame. It was chaotic, emotional, loud. People didn't buy Bitcoin because they understood it. They bought it because they were terrified of missing out. Greed wore the mask of opportunity, and the crowd ran straight into a trap they didn't even know was waiting. But here's the secret. This cycle is not the same. This time, the people buying aren't loud. They're silent. They don't tweet. They don't brag. They accumulate in the dark. Because this time, it's not retail driving the engine. It's institutions, whales, funds. The kind of money that doesn't chase hype. It creates the hype. And when the data says Bitcoin is a better buy than 2017, it's not saying the price is low. It's saying the setup is different, more dangerous, more controlled, more engineered. Because markets aren't free, they're designed, and the human mind is the easiest lever to pull. Fear, greed, herd behavior, that's the real market. That's the battlefield. And right now, most people are losing without even realizing they're in a war. Let me show you what's happening beneath the surface. Right now, liquidity is cycling again. The system always moves in waves: expansion, tightening, panic, relief, reset. And every time liquidity shifts, assets reprice, not because value changed, but because currency did. That's the part nobody says out loud. Money itself is decaying. The dollar is not stable. It's dissolving slowly. Inflation isn't just prices rising. Inflation is your purchasing power being siphoned away silently, like a leak in your wallet you can't see. And while people argue about groceries and gas, the elite position ahead of the repricing. They always do, because they understand something basic. When currency weakens, hard assets strengthen, real value rises. And Bitcoin, whether people admit it or not, has become part of that equation, not as a meme, not as a gamble, but as a pressure valve, a digital asset outside the traditional system. And when the system starts cracking, pressure builds. That pressure always escapes somewhere. In 2017, Bitcoin was still an experiment. In 2026, Bitcoin is infrastructure, and the data knows it. Here's the first hidden truth. Retail thinks Bitcoin moves because of news. Whales know Bitcoin moves because of liquidity. The headlines are decoration. The real engine is capital flow. Institutions don't buy because of excitement. They buy because of positioning. They accumulate when sentiment is dead, when the crowd is bored, when fear is thick, when everyone says the opportunity is gone. That's when smart money moves. And right now, on-chain data shows something chilling. Long-term holders are not selling. Supply is tightening. Coins are moving off exchanges. That means one thing: accumulation, the quiet kind, the kind that happens before the public narrative flips, before the media suddenly discovers Bitcoin again, before the same anchors who mocked it start calling it inevitable. That's not coincidence. That's engineering. Media narratives are not information. They're emotional weapons. They don't tell you what is happening. They tell you what to feel about what is happening. Fear makes people sell bottoms. Greed makes them buy tops. And whales harvest both. This is the liquidity trap. Retail provides liquidity through emotion. Institutions extract liquidity through discipline. And every cycle, the same story repeats. The herd panics, the herd chases, the herd loses, the disciplined win. Now here's where it gets darker. Bitcoin isn't just an asset. It's a scoreboard of trust. When people trust the system, they stay inside it. Savings accounts, bonds, fiat. When trust breaks, they flee. Bitcoin is one of the exits. And exits are dangerous for power structures. Because power depends on captivity. Control depends on limited options. A system only works if people believe there is no alternative. Bitcoin is an alternative. And that's why the game around it is so manipulated. Not because it's meaningless, because it's meaningful. Think about this. If Bitcoin was truly nothing, why do governments talk about regulating it? Why do institutions buy it quietly? Why do major funds build exposure? Why do narratives swing so violently? Because it matters. And the people at the top are never asleep. They're always positioning, always hedging, always playing both sides. The market is not a place where truth wins. It's a place where psychology is exploited. And right now, psychology is being set up again. People are scarred from past crashes. They remember pain. Pain conditions behavior. Pain makes people hesitant. That hesitation creates the perfect environment for accumulation because the crowd is cautious. While whales are hungry, they want you uncertain, they want you doubting, they want you paralyzed, because that's when they can load the boat without competition. In 2017, everyone was awake. In this cycle, most are asleep, and that's why the opportunity is bigger. Now let's go deeper. The financial system is built on debt. Debt expands, debt demands growth, growth demands debasement, debasement demands assets. It's a machine that can't stop. And when the machine reaches a pressure point, there is always a reset, not announced, not public, silent, through inflation, through currency decay, through asset repricing, a transfer of wealth from the unaware to the positioned. That's what cycles are. Wealth doesn't disappear, it moves. And Bitcoin is one of the most transparent arenas where you can watch that movement happen in real time. Whales accumulate, retail hesitates, institutions build, media distracts, then the narrative flips, then the flood comes, then FOMO returns, then the top forms, then the crash cleans out emotion again. This is the ritual, and the elite never stop playing it. Here's the mini cliffhanger. The data isn't just showing accumulation, it's showing something else, something more unsettling. Bitcoin supply on exchanges is near multi-year lows. That means fewer coins are available to buy. Now imagine demand spikes. What happens when an asset has tightening supply and rising institutional demand inside a weakening currency environment? You get repricing, violent repricing, the kind that shocks people, the kind that feels impossible. And that's when the crowd wakes up too late. But the twist is, that's also when the traps come. Because institutions don't just buy, they also engineer volatility, they shake out weak hands, they manufacture fear before liftoff, they create dips to accumulate more, they weaponize sentiment, and retail falls for it every time. Because retail doesn't trade charts, retail trades feelings. The human brain is ancient. It wasn't built for markets, it was built for survival. So when price drops, your brain thinks danger. When price rises, your brain thinks opportunity. But markets invert survival instincts. The thing that feels safe is often the trap. The thing that feels scary is often the gift. That's psychological warfare, and whales are masters of it. They know you'll panic sell. They know you'll chase green candles. They know you'll overreact to headlines. They know you'll seek certainty. And certainty is expensive, because by the time certainty exists, the opportunity is gone. Now here comes the climax, the shocking realization. Bitcoin isn't just in a cycle, it's in a structural shift. In 2017, Bitcoin was retail speculation. In 2026, Bitcoin is institutional positioning against fiat decay. That's different, that's deeper, that's more permanent. The market is maturing, the players are bigger, the stakes are higher, and the silent wealth transfer is accelerating. The elite are not asking if Bitcoin will matter. They're deciding how much exposure they need before the next reset, because resets always happen. Currency systems always erode. History is clear, the only question is timing, and the data right now is whispering. This is one of those windows, a window where fear is still strong enough to keep the crowd cautious, while accumulation is already underway. That's why it's a better buy than 2017. Not because it's early in awareness, but because it's early in positioning. The crowd isn't euphoric yet. The media isn't screaming yet. The mania isn't here yet. This is the quiet part, and the quiet part is where fortunes are built. But listen carefully. This is also where discipline is required, because Bitcoin is not a magic ticket. It's a volatile weapon. It punishes emotion. It exposes weakness. It demands patience. The elite win because they are unemotional. They buy when it feels wrong. They wait when it feels boring. They sell when it feels euphoric. Retail does the opposite. Retail buys comfort. Retail sells fear. Retail is trapped psychologically. So the real lesson isn't just buy Bitcoin. The real lesson is stop being predictable. Stop being emotionally harvestable. Stop letting headlines drive your nervous system. Learn the cycle. Learn liquidity. Learn positioning. Understand that markets are engineered environments, and your mind is the target. If you master the mind, you master the market, because money isn't just numbers. Money is belief. Money is psychology. Money is trust. And Bitcoin sits at the intersection of all three. Now, the resolution, what do you do with this? You stop thinking like a spectator. You start thinking like an operator. You ask, who benefits from this narrative? Who is accumulating while fear spreads? Where is liquidity flowing? What is currency doing silently in the background? Because real wealth is built in the shadows. not in the spotlight. And the biggest mistake people will make is waking up only when the media screams. By then, the elite are already positioned. So here's the unforgettable truth. Bitcoin is not just an asset. It's a signal, a warning, a mirror of the system's decay. And right now, that mirror is showing something that feels almost illegal to understand. The opportunity isn't gone, it's evolving, and the people who see that will not see money the same way again. So let me ask you a specific question. Do you think Bitcoin is becoming the ultimate escape valve or the ultimate trap engineered by the same elite? Drop your answer in the comments. I read them. And send this to someone who needs to hear it, because most people will sleepwalk through the next wealth transfer. Subscribe, turn on notifications, and stay sharp. Because the next chapter of this game is already being written, and the ones who understand first always win.